Welcome back. You're tuned in to Bazaar Morning Call. Well, looking at the screen and looking at the Asian markets, we're getting set for a bit of a freaky Friday, but let's see whether or not the Nifty, can defend that 19,250 to 19,300, which we've defended twice this week already. Well, we ran you through the top 10 stocks that we're looking at, but there'll be some changes as well, index changes. So just want to highlight that for our viewers. The Nifty next 50, well, it'll witness 5 removals and 5 additions. That's from September 29. The new inclusions, they include PNB, you have TVS Motors, Shriram Finance, and Trent. I think Trent and Zydus Life, they are the larger ones in there in terms of flows that they could attract. While on the flip side, you have ACC, Nykaa, HDFC AMC, Industars, as well as Page Industries. They're the ones that will get excluded as well. So just keep an eye out on these stocks, because in the next 1 month or so, there'll be some changes in the next 50, Nifty next 50. But Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Good to have you in, Dipan. Well, Dipan, I just want to ask you about a couple of stocks then. I don't know whether you're tracking them closely, but REC and PFC, out of nowhere, you have these stocks that have come up big time. And that was actually an indirect play on all the reforms in the power space. Valuation-wise, they were fairly decent. And yesterday, there was, a couple of notes that came out as well. And the indications are that they indicate that, they'll continue to grow and the asset quality will improve. Are you tracking both of them?
Yeah, good morning, Nigel, and thank you for having me on your show. Of course, we are tracking. They've been listed for decades. But unfortunately, the stock track record had not been that great. And even their performance was quite erratic. Despite having such a fabulous status as PSU lenders, there was virtual corporate guarantee as far as their debt, the body of debt lent out is concerned. But it's just now that I think they are seeing a beautiful scale up taking place. And higher and higher loans are being delivered at reasonable rates of return, and they're able to maintain the net interest margins. And these companies never had too much of an issue with NPA as well. So I think after the PSU banks, investors have turned their eye onto these state NBFC companies, which are attractively valued. They were trading perhaps below book value as well. And there is some hope that now there will be consistent performance in terms of 15-20% type of earnings growth, which is why we are seeing increased interest in these companies. And I think from a risk return profile, these companies certainly should outperform over the next few quarters or so.
Dipan, hi, good morning, and thanks for being with us on the show. A lot of heavyweights have been under pressure, right, in the last couple of months. And what stands out is Reliance. I mean, it's down 10% already from its highs in July. Do you think this is a good time to be buying Reliance, or would you be a bit cautious here?
Good morning, Sonia. Thank you for having me on your show. I think, overall, we are seeing that large cap stocks have been subdued and a lot of action is taking place in the mid cap and small cap stocks and many new 52-week highs over there. Specifically to Reliance, I think lack of any triggers may be leading to this kind of a correction in the stock price. And the stock had run up significantly just prior to the demerger of the Jio Finance unit. And thereafter, I think there's a corrective phase. It also could be that some investors and traders may have bought Reliance Industries to take advantage of the split and then kind of square up their positions. But I think from a fundamental perspective, it's a great stock. And still there's sort of value unlocking opportunity. Of course, the results were slightly disappointing, but that's because of the cyclical nature of the oil to chemical business, and that should also correct over a period of time. The main question, of course, is what is going to happen to the two large businesses within Reliance Industries, the retail business and the telecom business, and how they will get listed separately, whether it be an IPO, which would make Reliance a holding company, or whether there'd be a split, as we saw in Jio Financial. I think that's the main question which investors are asking at this point of time.
And of course, I mean, the AGM is on the 28th, which is the Monday after. So that's always an important event in the Reliance calendar in that sense. So we'll hear more there. Dipan, hi, morning. The Cochin shipyard, it's like, it's not a ship, it's a rocket. 40% this week, and we've got 1 day to go. Garden Reach is another one which was galloping. It cooled off a little, not cooled off, but was not up 10%. So does not make the cut. That's the rate of outperformance here in this space. Any thoughts? What's happening here in these names?
Good morning, Prashant. I think, as is the case with Power Finance Corporation, PFC and REC, and what happened with PSU stocks and what is happening in defense companies is that after decades of underperformance, we are seeing increased traction in the PSU stocks. I think overall management has improved, transparency has improved, communication from these companies is better. And because of this Make in India and Atmanirbhar policies of the government, especially defense stocks, engineering stocks are seeing renewed vigor in terms of larger and larger order book positions. And now all that the PSUs have to do is just execute and execute over there. And I think that we are seeing the early signs of improved execution amongst the PSU companies, especially the shipyards. And with these kind of order book positions, investors are quite secure in terms of earning visibility. And in a way, they are a safe play because if the market or the economy were to turn, these companies would keep on performing because of the order book position which they have. Only one sign of caution is that there could be earnings volatility because these are all revenues booked on percentage of completion, and that does fluctuate considerably. And as and when new ships come on board for execution, there could be some pressure on margins. But on the whole, no doubt that Cochin Shipyard and other shipyards offer a very interesting investment opportunity. And maybe not when they are flying, but at corrections, one could look at getting into these companies.
Okay. Well, Dipan, just stay on. We'll come to you in a bit.
Welcome back. There's 13 minutes to go for the pre-open session. That's at 9. 90 points has become a little more acute. We were down 70. The indicative open is down minus 90 now. Dipan is still with us. So we've discussed a bunch of things, Dipan. But just wanted your thoughts on a few names. Now, I don't know if you track them or own them. Dreamfolks is one I wanted your thoughts on. Ever since the numbers came out, it looks like the dream has ended. And the other one is Balaji Amines. I mean, just a complete sell-off. But actually, Alkyl Amines is also corrected quite a bit. It's a cyclical business, sure. But there seems to be company-specific problems for Balaji Amines. They could not gather enough people to sit in and finalize the accounts for the quarter. They've pushed back the date for when they will declare the first quarter numbers. Balaji, that is. So your thoughts, Dipan, on both these names, Dreamfolks and Balaji.
Yeah, Prashant, it's not just that they couldn't declare numbers, but I read somewhere that 5 independent directors also have resigned in the past few months or so. So obviously there are concerns on corporate governance front. And maybe, the full story will come out a few weeks later or so. But that's certainly one stock I don't want to touch at this point of time. Coming to Dreamfolks, a disclosure, we and our clients have been invested in the company since the IPO. And what really disappointed was the sharp increase in expenses. And although there are justifications for it, that it's in going into building the business and investing for the future. But nonetheless, I think the sharp correction or fall in the margin certainly is concerning, and whether this is structural or one that one needs to see. But overall, the story is quite phenomenal. And if you want to play on rising air travel by the average citizen, then apart from Indigo, this is perhaps the only solid company that one could look at. And they are gradually expanding their network also overseas through tie-ups. The only risk factor, of course, is if they lose a few lounges exclusivity, then certainly that could impact the revenues. But nonetheless, I think it's a great structural and secular story. And one needs to see how the margins are actually shaping up over the next 2-3 quarters. Having said that, we remain invested in the company and are quite, I would say the story is excellent at this point of time, but it's a new listing. So it hardly has any history in terms of reporting of numbers.
Dreamfolks, by the way, I was just looking at it listed in September of 2022 at 508. That was the listing price, Dreamfolks. The stock yesterday left off at 510. So it's almost back at the listing price. Of course, I mean, as compared to where they sold stock it would be well in the money still. So got that, Dipan. So problems near term, but you're saying structurally things are looking good. Any thoughts on another name, Global Spirits, which again seems to be which was like a fancied name, but has again undergone a fair degree of price damage. There was that block which happened yesterday as well.
Yeah, that's right. Global Spirits and other alcohol-bev companies also, I think, should report good numbers or have been performing well. They were hit by rising prices of glass and raw material, especially ethanol. But now I think things have stabilized and they have made cost increases. They have passed on these cost increases. Global Spirit also has a commercial ethanol business, and that can have its own vagaries in terms of earnings. But on the whole, I think these alcohol-bev companies should do very well given the demographic advantage of India and increase alcohol consumption. And if you look at the entire sector, it is these smaller companies like Radico and Alco and Global Spirits and maybe Tilak Nagar Industries, which have clearly outperformed the larger ones like United Spirits and United Breweries for that matter, because they're able to manage the regulatory environment far better. And mind you, this is a highly regulated industry with controls on pricing and distribution. So from that perspective, I'm still quite positive on the likes of Globus, Tilak Nagar, Radico, Ketan. I think they're expensive, but the potential to grow earnings over the next 3 to 5 years are quite decent, given rising consumption of alcobev.
Dipan, I would request you to just stay on for a bit. We'll come